So I would have to say one of the most powerful things besides the idea of retiring early is being able to retire certain. And working with a lot of my clients on a regular basis, I have the great fortune of not only working in the lending space, the small business space, banking products and services, but I have a lot of invested time and work with a lot of clients around retirement planning and strategies. And I have the opportunity to see a broad range of demographics of people from various backgrounds and different stages in their lives and their careers trying to put together their retirement plans. And I wanted to cover in this video 4 retirement income strategies that are very powerful, that are very realistic to put into play to make sure that your retirement is as sturdy and confident as possible whenever it is. And also how you can compound these 4 different strategies into each other to actually make sure that they're working for you while you're also working at the same times towards your retirement. So that means we're going to help you in this video figure out how to make sure that your money is actually working for you while you're also working to fund your own retirement. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your personal blueprint for prosperity. So many of my clients that I deal with on a daily basis, when it comes to retirement, the natural inclination is for them to have the confidence to know that they're not going to run out of money as they start to get to their retirement ages. And many people are not fortunate enough because they don't plan in advance to have that peace of mind at a relatively young enough age. So people end up working deep into their 60s, 70s, and in some cases even beyond, which is almost crazy to think about. Not because they have a passion for work per se, but because they need the security. They need the benefits, they need the medical benefits, they need, the income itself. They have to keep working for various reasons because they didn't plan and situate themselves enough for retirement early enough in their lives. So for those of you who are still in your working years, wherever you are in that stage in your working years, this video is intended to just give you some quick context on income strategies, because at the end of the day, the lump sum aspect of it is one dynamic, but that at the end of the day, what really matters at retirement is income. Having the ability to cover your monthly expenses without having to punch a clock and still fund your lifestyle. And I want to give you 4 income strategies outside of Social Security, outside of 401ks. Those are cool, but these are going to be other strategies that you can be putting in play and actually compounding them by using them to funnel each other. So by the time that you get closer to your retirement age, you haven't had to do all the lifting yourself to have a secure and stable retirement. So the first one that we're going to cover is rental income. It's already a hot topic, nothing new there, but it is an amazing opportunity for you to have a multi-pronged asset that will benefit you in the now and in the later. What I mean by that is when you have a rental property, you are getting mortgage pay down, typically going to get equity, typically going to get rent growth, and you're also going to get pretty sizable tax benefits. Talk to your tax advisor, not a tax strategist, but oftentimes you'll get amazing tax benefits as well. So that means that for those of you who are still working, this is an opportunity for you to just put money to the side, nothing crazy, nothing extra fancy. Try to take down maybe a property every 1 or 2 or 3 years. And even if those properties are paying for themselves, giving you those tax benefits, appreciating because you bought properties that are in decent areas and have potential for growth in the future, the rent is stable and the rent is also increasing over time. Even if the cash flow is not that sexy, by the time you get to your retirement, depending on where you are, this can be an amazing financial retirement vehicle, one of them for you. And I'm going to also cover how you can use this rental property income to potentially funnel into the next couple strategies and really build your goose egg up so you can continue to retire comfortably. The next one we're going to talk about, dividend income. Stock dividends can be another really solid income stream if you know what you're doing. It's not the same multi-pronged benefit like your rental property would be, because you're not really going to have the same tax benefits in most cases. And the appreciation component when it comes to dividend stocks is not as common. It happens, but in most cases, when companies are at a point where they're paying out dividends, they are beyond the growth phase. They're usually really stable companies in most cases. There are exceptions, but in most cases, you're not really going to see much in the way of equity. It's a pretty stable company in most cases. But dividend income nonetheless can be a phenomenal tool, because it's another opportunity for you to funnel in your working income and put it into companies that are going to pay you an income stream every month. And the trick to this is, if you're still in your working years, don't use that income. Use that dividend income to reinvest back into those companies so it compounds upon itself. If you're getting a 4, 5, 6, or 7%, 8% dividend rate from one or multiple different companies, you have an entire basket of dividend stocks, whatever the case may be, while you're still working, don't use that income. Let it go back into the investment and compound on itself. The next one we're going to cover is going to be annuities. Annuities are phenomenal financial products when they are used at the right time. They have a bad reputation among some financial professionals and some, everyday people who have, been sold annuities when that was not a good fit for them at that time. And there's, history in the past where people have, there was a lot of money in annuities, and some financial experts were peddling annuities, and they were not to the benefit of the clients they were serving. And so there's a little bit of a negative rep. But for those of you who may not be as familiar, really quickly, annuities are insurance products. They are contracts, and they are, basically guarantee contracts, income streams. They are basically an income product, basically. And they come in different forms. It's similar to life insurance in a sense of speaking, because they can be, single premium, fixed, they can come in many different forms. But for the sake of this video, we're just talking about, a fixed annuity, and, one that you can pay into over your working years or at some point closer to retirement, because they're not the perfect product if you're really young, but they can be great as you're getting closer to your retirement years. You can either build up a lump sum of cash and put into it as a single premium annuity. But the moral of the story that makes this an attractive income product is the fact that it's contractually guaranteed. And you also can set up a death benefit. In a lot of cases, you can also set up income for your spouse. It also will allow you to have different riders. There's cost of living adjustment riders that you can add on to help you keep up with inflation. There's these different little attachments you can put on it to not only ensure that you're getting that fixed income, because what you're doing is giving this insurance company a lump sum of money. And because you're giving them that lump sum of money, excuse me, you are getting they're guaranteeing you a fixed return on that money, because you're insuring to keep that money with them for the long haul. So what they're simply going to say is, okay, you're giving us $500,000, $750,000, whatever the case, $1 million. And what we're going to do is you're going to commit to whatever time frame, or this is a lifetime annuity. And then we're going to pay you out X amount of percent on this money for the rest of your life. And then from there, again, you can put it in different riders and little provisions that will make sure that you're getting additional benefits from that income stream. But again, long story short, phenomenal income stream, especially if you're building up a lump sum of some sort and, looking to put it into something. It could be over retirement. When you get to your retirement stage, it could be like your 401k or an IRA that you've been building up in your working years. You can put into an annuity and get a guaranteed monthly income while keeping the principal intact. The next one we're going to cover, many of you may not know about, which is whole life insurance. So this deserves many videos and a whole educational lecture on its own. But many of you may have heard of infinite banking, bank on yourself, whole life, high cash value, whole life insurance products. And these are whole life insurance products, permanent life insurance, that are structured and designed very differently from the standard whole life policies. And the long story short is they can become basically like supportive financial assets. So it's not really an investment product, but you can put, either you put monthly premiums or single premiums or quarterly premiums in it. And the product is structured in a way where the majority of that money actually goes to cash value and not as much towards death benefit or the commission of the agent selling it. It's set up in a way where a lot of that money sits. It can earn dividends and other, earnings on it. And it's very stable. It's tax sheltered, and depending on how you use it, it can create a tax-free stream of income for you because you will pile that money up in the cash value over your working years. It has an amazing death benefit component. There's other terms and riders that can give you like disability insurance, illness insurance, things of that nature. And you can basically, when that money builds up and you get close to your retirement years or at your retirement years, you can, if you want, draw from that money in the form of a loan, and it could be tax-free that way. And the worst case scenario is you draw for that money and you pass away at some point down the line before you can pay it back. It comes out of the death benefit and your family is still getting a sizable death benefit, but you had an additional retirement income stream from tax-free from a product that you've been putting that money into all that time. So it serves multiple purposes. And for those of you who are new, that may be a little confusing, again, drop a comment down below if you'd like me to elaborate more. Of course, I'm going to actually shoot more videos around this because one of the biggest prongs or pillars of this channel is the proper use of life insurance. It's a phenomenal asset. It's a phenomenal financial product when used properly. So how can you take these 4 different income streams, rental income, dividend income, annuity income, and whole life income, and compound them? Creativity is important. So when it comes to your rental income and your dividend income, these are active assets that are going to be pushing out cash flow. And so you have a couple different options. My first recommendation with these 2 in particular is not to use it to live off of until later on when you're closer to or at retirement. Do your best to not need this income, your dividend and rental income. Because what you can either do is reinvest it back into paying the property off faster, or in the case of the dividend income, you can put that money back into investing in more shares of that company. So you're increasing your holdings and thus getting more income, dividend income. Or you can use either one or both of these products to invest into your annuity and your whole life policy or your whole life policy. So that means you basically can use the X amount of $100 a month or thousands of dollars a month that you may have, depending on the size of your cash flow from your rental property or the cash flow from your dividend income, and funnel it into your whole life product, your high cash value whole life product, or your annuity. And that way you're not trying to fund all of these from your work income yourself. You're actually allowing your assets to fund your other assets, if that makes sense. So you're like you're compounding this at this point. Your money's starting to work for you. So this is just a quick creative hack for you to take even just a few rental properties or, a reasonable sized dividend portfolio, depending on where you are. Hopefully you have more time towards your retirement and you have time to let these things grow and compound, because of course, as these rental properties get paid down, that starts to free up cash flow if you ever decide to refinance the property, or it gets paid all the way off ideally. And your dividend income, again, that portfolio is increasing because you're using that dividend income to buy more shares, which more shares means more dividend income. Or like I said, you can funnel all of that excess cash flow into your annuity or into your whole life product based on what fits for you. This is creativity at its finest. Because another quick hack before I get out of here, whole life insurance actually can be converted into an annuity. The cash value in your whole life insurance policy can be converted to an annuity tax-free. It's a nice hack because the whole life policy serves as a cash savings vehicle where your principal is protected. You can borrow from it without disrupting it, and you're earning dividends on it in many cases. It's building up, it's growing, and then it grows to a lump sum at some point towards retirement. You can put it into a design income product like an annuity, and you can do that transfer tax-free as of the recording of this video, of course. So this is creativity at its finest. I hope you guys enjoyed the content. Comment down below and let me know what you think about these different strategies. Are you using any of them? You already had plans for them? Is this all new to you? You want more details? I would love to shoot a part 2 to this. Let me know in the comments below. Thank y'all for tuning in. Like, comment, and subscribe. Stay focused. Stay in motion. I'll see y'all soon.